Yes, the happy ukulele always means on a Friday afternoon that it's time for, yeah, you guessed it, Ask a Bookkeeper, right here on 21/6 and that Ask a Bookkeeper, brought to you through the financial support of our good friends at Steph's Bookkeeping. You have numbers that you deal with in your business. Call Steph or check her out at www.stephsbooks.com. And now, let's talk about, I don't know, knowing your numbers and getting ready for a strong start to the new year. Everybody put your hands together. Here's Stephanie Conley.
Hi everyone, Stephanie Conley here. Little bit semi-unprepared for the show today, so hopefully this goes as smooth as it normally does.
But busy day for you.
Yes.
I mean, you've been going since sunup, and that's why.
We've just been running wild.
Yeah.
Everybody. So we've been getting a lot of questions, and I feel like there's been a lot of similar concerns going on with some of the other small businesses in the local community, all the way out to the Carolinas. We got some phone calls from them, so I feel like everybody's on the same path.
Mm-hmm.
So I just kind of wanted to get everybody ready for the new year and maybe looking at the way you've been running your business and operating, and looking at maybe some new ways and new procedures that you could implement into your business and your bookkeeping to then be able to take your numbers on a monthly basis and really make them work for you, and really be able to start analyzing and figuring out the nitty gritty of when is it time to hire, when is it time to add a vehicle, when is it time to do that, and kind of how to look at those formulas and calculations and really make a positive impact going into 2021. Because I feel like if you're a small business and you survive 2020, you know, you're going to deserve
God bless you.
a better 2021. So to get started, I want to talk about some of the, I guess, bad habits that I've seen in the recent years with some businesses, and how it impacts your ability to make a business decision with some of these bad habits. So I'm not yelling at anybody. I'm not scolding anybody. I'm not talking about any specific businesses. I'm just saying these are things that I've observed, and in my professional opinion, if we eliminated these things in your business, it could help you to make better decisions. So I guess the biggest thing that I've noticed is that when people start their business, usually you're a sole proprietor, we'll just call it a guy in a truck. You're a
chick in a ladder, whatever.
Yeah, a one-man band.
That's it.
And that income that's coming in and the revenue that's coming in from your business is really your main source of income into your household. And then you you have your personal account and your business account, but there's a lot of commingling going on between business expenses and personal expenses. And the problem that you start running in with that is if you have such a high mixture of personal expenses and business expenses, it's really difficult to take your profit and loss and analyze it and determine the health of your company.
So even if you're a cash heavy, so let's say I'm a barber. Barbers are always cash heavy, right?
In theory, I guess, yeah.
Right. So that's still a problem.
So
just putting it in one account and using it.
Right. So you want to really separate your personal and your business, not only to be able to make a business decision, but also if you get audited. You're at an extremely high risk if you get audited and you have such a high mixture of personal expenses in with your business expenses on your profit and loss statement, and you don't have receipts or you can't explain it. Then really at that point, it's up to the auditor's discretion on how they want to choose to proceed with this category, such as meals and entertainment or advertising, job supplies, things like however you categorized items, like such as going to like a clothing store, getting your hair done, getting your nails done, things like that. You're really gonna be at their mercy at that point because you have no way of deciphering and proving the legitimate business expenses versus the personal expenses that you've chosen to hide in your P&L versus put them on your balance sheet where they belong under your distributions, or dividends, or if you invested money and you loaned the company money and you're getting paid back on your loan, all of those things really should be over there. So once you kind of start muddying that water, it's a very hard habit to break.
Mm-hmm.
And trying to explain that to some business owners, the reaction I get sometimes is more so like, oh, well, everything I do is for my business, like wink, wink. Like, I'm not telling you this because I'm going to call the IRS and report you. I'm telling you that I've noticed some things that raise a red flag to me as a bookkeeper. And if you hired me to be your bookkeeper, I would imagine that you're looking to get some of my advice or guidance.
Would help.
So I don't know.
That's why you hire a doctor.
Yeah.
Too, right? You would like their professional opinion.
So if this is raising a red flag to me, and I'm not an auditor, I haven't gone through the training by the IRS to learn what they're going to look for. I have sat through audits, so I kind of have an idea. But it's just, if it raises a red flag to me, it's going to raise a red flag to them. And then from there, you have this problem that's going to come from it. And some of the responses I've gotten in the past are, oh, well, my accountant, does whatever and I don't have to pay taxes at the end of the year. Well, again, me as a bookkeeper and your accountant as a CPA, we are going to give you the best recommendation and professional opinion on your books and on your data that you've compiled and provided to us. We can only make a professional assessment of it based upon what you say. So if you tell us that it's business related, then we'll put it in there as business related.
Right. You don't know. You can only go with what they tell you.
Right. I am not the honest police when it comes to that kind of
here's what happens. You get called to court, you'll be like, well, this is what they said.
Right. Well, no
further questions.
Like at the end of the day, you're the business owner, you're the business, adult, and so it's up to you to kind of, provide that kind of honest information. So when you have the honest information, then from there we could do some analytics, we could do some forecasting, we could do cash flow projections. There's so many awesome things that we could do.
So I think that's and that's what we're talking about, is knowing your numbers. And I think a lot of us small business owners don't. Hey, I know how to paint a house, and I'm a painter. I know what my paint costs. I know what my hourly, how much square feet I can paint an hour, and I can estimate that out. But I don't understand. My theory is I'll just paint 2 more houses this week.
Right. So, yeah. And then Ted has a good point. If you have a good bookkeeper, it makes your accountant's job much easier. Yeah. So in theory, if you have clean books and they're ready to go, then yes, you will pay your accountant less than, because then they just kind of have to plug and play most of the numbers into the tax return. And then they have their, entries and journal entries that they put in annually as it is. Yeah. So if your books are clean or if you're not able to do your own books, then yes, a bookkeeper will make that easier. And also we work as a liaison between our clients and their accountants if they need us to. Since we speak their language, it makes it a lot easier for that level of communication to happen between our clients and their CPAs. So once we establish those honest numbers, and then the next thing is trying to retrain your brain to not operate out of your checking account.
That's a good question too. At what point in a business's life should a business get a bookkeeper?
Well,
If it's Steph's books, right away.
I mean, typically, I would recommend having a bookkeeper set up your accounting software. So they could set up your accounting software, get your feeds, your bank feeds and everything up and running, and kind of get you some basic training on how to categorize things, reconcile your bank account, just kind of get things going. Like, for example, like if you're just a startup and this year you did $7,000 in revenue, well, now you can you could take those next steps to start doing that. And then from there, as your business grows, I would do quarterly appointments with a bookkeeper and go through your financials on a quarterly basis, get everything prepared to file your quarterly estimated payments, or make sure that your quarterly payroll stuff is handled and filed. And then from there, as the business grows, like usually if you're doing over, it's so difficult to say because each industry has such a different price point for their invoices. Like I have a client, he'll invoice like a couple $1 million on an invoice, but it's only one job, and then I have another client that does, like $10 invoices because that's what they, because they of their product that they sell. Right. So it's very difficult to gauge it. But I would say if you're doing more than 100 transactions in your bank account, incoming and outgoing, between the credit cards and the bank account, then I would definitely look to hire somebody on more of a monthly basis at that point. And usually you're, in theory, hopefully you're doing close to about $30,000 a year in revenue at that point.
Yeah. Nice. If you're, so you're the guy in the truck, you're doing business as, so you're using your own tax identification number. You haven't got one for your business. So you're using your own SOCH. And they tell you, I understand what you're saying. However, the bank charges fees for a business account. I'm just not making enough money to put in the business account.
Well, then I guess my question to that would be, is that $15, if that $15 a month from your bank is going to make or break your decision to separate your business and personal, then you really need to reevaluate your business model, because if the IRS comes in, does the audit, and they see that you have no money going into your personal account, but your mortgage is paid, your gas is paid, your lights are on, where did that money come from? And if you're categorizing everything as a business expense, then they're really going to hold you to the fire on that. And when you get audited, if they determine that you are at fault, you not only have to pay the fine, but they could assess penalties and interest on that fine. Ooh. So, and they can go back, I believe, 3 years. So, that can be quite a bit of money over a period of time. So it's always wise, if you're a small business owner, to transfer the money into your personal account, pay your personal household bills. And then at the end of the year, if you operate out of your house, you're going to get the home office tax write-off, which also you get a percentage of your utility bills also gets written off, because if you have an office, you have utilities.
Yeah. What if your office is a closet?
Well, it goes by square foot. So whatever the percentage of your square foot is, that's what it kind of goes off of.
It's under the stairs. I'm like Harry Potter.
So, so kind of basically after that, I feel like, you guys, they just need to kind of start thinking like an owner and not thinking like an employee anymore when you were getting a paycheck working for somebody else.
And you had talked about knowing your numbers to help you make decisions in your business. So a lot of entrepreneurs that I work with, that I know, just kind of guess like, let me buy that. Right. And then a month or, a few weeks go by and they're like, shit, shouldn't have bought that.
I think that kind of goes back to operating your business out of your checking account versus operating it as a legitimate business. Because you have all this money coming in, and then you're like, oh, I have a surplus of $10,000 in my bank account, so I'm gonna go buy a truck because why not? And then then like maybe 3 months later you have another surplus, and then you go on a vacation. And then at the end of the year, when you hand your CPA everything for the whole entire year, because you have no clue whether you made money, lost money, whatever happened. Well, let's say you made money. So if you made money, now Uncle Sam wants his cut of the pie. So all of that money that you had spent should have had, in theory, a portion of that profit should have been going towards your estimated income tax filings, or it should have been going towards your quarterly payments for maybe your payroll or things like that. So it's always wise to have up-to-date information and numbers, especially before you go make a big purchase like a vehicle or a vacation or whatever you choose to do, or hire an employee and stuff like that.
Ted, good question. Best thing to do is reach out to Steph at stephsbooks.com and set something up with her that way.
Yeah, Ted. Just reach out, and then we can get things back on a schedule, and or you could come by and check out our new office and see what we have going on there. But yeah, we're always open for a phone call. And so let's say you have your numbers right, you're ready to go. For me personally, I'm going to use my business as an example because I could talk about my business without getting in trouble.
Sure, let's do it.
We're on the brink of hiring an employee.
Ooh.
So we hit the volume number as for the number of accounts that we felt we needed to be able to. I'm in the same building as the radio station in McHenry, and the Tanyan building. I'm like right down the hall from Kent.
That's it, right here, high atop the William Tanyan and Sons building, 1400 South, or State Route, not South, but State Route 31, McHenry, Illinois. Stone's throw away from Bulldog Ale House.
Yeah. So we're kind of running through our numbers, and because we track all of my time that I spend on the files through our CRM, we have our monthly reports, and we could see our revenue, our profits, we could see all that fun stuff. So now we were able to do some analytics and determine if we hire an employee at this dollar amount versus this dollar amount, and if we hire a part-time person versus a full-time person. So I'm going to use $20 as an example because that I think is a fairly common going rate for an entry-level bookkeeper. So if we hired somebody at $20 an hour, because we were able to take the historical data that we have, we determined that employee would need to bill out at part-time $7,000 a month to make it worth hiring the employee. Because not only will I have work comp expenses, employee expenses, and then I still need to hit my margins.
Yeah.
And then if we hired them full time, they would need to bill out a minimum of somewhere between $13,000 and $15,000. So now we have to look at our monthly reoccurring revenue and then make a decision on that, on what we can bring in and how we could bring that person in. And the only way, again, that we were able to sit there and do this math and calculate this and make an educated decision, because there's nothing worse than hiring somebody and then realizing you can't make payroll. Whoops. And you need them to hold checks, or you yourself as an owner need to hold checks. And
or
then
you're cutting it out of you're taking cash advances out of your credit line or whatever, right?
Right. Like it just starts a very big snowball effect to where it's going to cause these problems for you in your business. So that's one of the things of why it's so important to have up-to-date information to make these educated decisions as a business owner. Because if I didn't take the time to do these proper steps to begin with, then how would I know if I'm financially able and ready to hire an employee? And me as an owner, would I have to take a pay cut to hire an employee? Or do I have enough funds in surplus? Like, let's say of that $7,000 I need them to bill out, what if I'm at like a $6,000 mark with it? If I hire somebody, do I have enough in savings to supplement that, and with the ability for me to then go out and sell more because they're handling all of these accounts? Then how fast would it take me to replace that $1,000 I need? And just kind of running through all of that really gives you a good idea on how all of that is gonna play out, and be able to make an educated decision from there, because it's very difficult to fly blind. I'm not saying that you can't fly blind and be successful. I mean, there's people that have been in business many years, and I'm pretty sure they've never once looked at anything.
Books,
so
just here's everything. Here's my accountant. Get me done at the end of the year.
Right. Yeah. So I just think that so that's just one aspect of knowing your numbers. Another aspect of knowing your numbers is, like we've talked about, is your tax liability. If you're an LLC and you have to pay your quarterly estimated taxes, how do you know how much you got to pay? What happens when you get that surprise bill from your CPA at the end of the year for $45,000? Now what? Yeah. Did you put aside $45,000, or are you staring at that new Ford F-150 like, dang, maybe that wasn't a good idea?
Shouldn't have got that 3-inch lift on
it. So it's just being able to calculate those payments and set aside the proper money to do that. So we're kind of hoping by doing these, like, because last show we kind of did review on your balance sheet and your P&L, and now we're kind of just talking about best practices, and we're hoping through this little like 3-part series that we're putting together that you guys will really take the whole approach of really new year, new procedures into effect in your business. So this way then,
and as if anything this year has taught us is if you aren't working with a bookkeeper and mathematically and taking a look at this projecting, there's a lot of businesses who's gone under this year because of the pandemic and the craziness. But had they worked with a Stephanie Conley from a Steph's Books and gone over some of this stuff, maybe they wouldn't have got over their skis with a lot of things, right?
I guess so. To Ted's question, is it better to have an employee or an independent contractor? It really depends on your industry. For me specifically, as a bookkeeping firm, I will have an employee and not an independent contractor, because an independent contractor, you can't tell them how, what, where, and when to do things. You can have your subcontractor agreement where you could create deadlines in there for them, but I can't manage their day-to-day operations and communications with my clients. So because of that, I don't feel comfortable having independent contractors in my specific industry. But if you were, let's say, in the construction space and you were a general contractor, then depending on what services you want to offer in-house versus to outsource, it's not a bad idea to have a handful of independent contractors that you could bring on job to cover your overflow, to be able to keep your projects running in a timely manner and get those deadlines met with those clients. But again, in the state of Illinois, if they're an independent contractor, you have to have a W-9. They have to invoice you for not time and material, but they have to present a bid and invoice you according to that. You cannot reimburse them for expenses. You cannot provide them tools on the job. They have to have their own tools. And they have to.
They can't wear your logo either, right? Something like that, I think, from an HR standpoint. If they're or you can't give them a business card. If they're representing you, then they're an employee or something.
Right? Yeah. No, I don't think. Yeah, no, because I think they would wear their own gear, but they have to invoice you on their own things. You can't micromanage them on the job. They just, if you hire somebody to lay down pavers, it's a landscaping company, they have to go in there, lay the pavers down, and do that. They need to provide you with a certificate of insurance for general liability, and I think their work comp coverage, And so there's quite a bit of rules in the state of Illinois of what constitutes an independent contractor.
Yep.
So you could look that up on the Illinois state's website as well. They have that listed on there, the whole list. Okay, good. I'm glad Ted says that we answered his question exactly. So that's good.
Well, we finally got one right towards the end of the year. Thanks, Ted.
So, I guess one last thing I just wanted to reiterate. We've gone over this, I think, 3 or 4 times now on the show, and I feel like
You're still
maybe
giving
they were
questions on it. Yeah.
It's the same question, and I feel like maybe that's like a first-time caller, first-time listener. So, but so this whole year, there's been businesses that have gotten the SBA loan, the PPP loan. You've maybe had to open up or use your credit cards to supplement your business during the shelter and stay, or just some of these fun, crazy things that have been going on. So all of these liabilities that you're incurring right now, you are increasing your expense on your profit and loss, and you're also increasing your liability on your balance sheet, which is what I have pulled up right now is the balance sheet from the sample company in QuickBooks. So all of these liabilities that you incur in 2020, let's say you can't pay them off completely in 2020, and now it's carrying over into 2021. And you're wondering where, and now you're starting to pay these liabilities off because you got sales coming in, and you're like, okay, I'm going to pay this off. Well, now you look at your profit and loss statement, and it seems a little high to you for your income. So you have to take into consideration that all of these liabilities that you incurred in 2020 are on your balance sheet, and your cash, which is an asset on your balance sheet, that's all that's being affected. So your asset of cash is decreasing and your liability is decreasing. But you already recognized all of those expenses when you bought those items in 2020. So that's why your profit might look a little bit higher than your bank account and so on and so forth. Like your profit and loss will never match your bank account. Ever, never, never will that happen.
Huh.
So that's just something to take into consideration. And also just to give all you listeners some just food for thought. Everybody that's submitting in now for these PPP forgiveness, most likely, yes, the money will be forgiven if you filled out the forms properly. But now that liability is going to be moved from a liability to your other income section of your profit and loss, which is going to drive up your profit.
Yeah.
Because in theory, they were giving you this money to replace the lost revenue to be able to still pay your employees.
Wow. So
when you increase your revenue, you're going to increase your profit potentially. And if you're showing a profit at the end of the year and you're going to pay taxes on that money. Like the government, the bank, nobody out there is going to give you free money 100% for free, unless maybe it's your mom. But
and then maybe not even that.
Like you will, if you showed a profit, you will wind up paying taxes on that money after that is forgiven. Just like those stimulus checks that we got. My understanding is that that is going to count towards your income, and you will, pay that. I mean, it wasn't like some outrageous amount of money, thank God, but some of this with the businesses, it was.
It was. Well, of course, the music that you're hearing is saying that, hey, it's about time to get out of here. Of course, you've been listening to our good friend Stephanie Conley from Steph's Bookkeeping. Check her out at www.stephsbooks.com, where she's going to help you know your numbers, get ready for a new year and doing things right. So again, 847-942-3004. She's here every first and third Friday at this exact time. So for all of us here at 216 The Net, any last parting words?
If any of you guys have any recommendations, questions that you'd like me to do live on air, please feel free to private message me after the show, and we will try and get those on on our docket for the next show.
Absolutely. And on Monday, Hug a Veteran.